What's going on, everyone? So I want to kind of do a little video where I kind of want to talk to you guys. I kind of want to go over, a little bit of a strategy here. But I want to go over why one of the number one reasons why so many day traders or newer traders or aspiring day traders fail. A lot of times you guys fail because there's too much thinking involved here. Okay. To kind of make this video not be 3 hours long, you have to trust your edge. And if you don't have an edge, you're simply gambling. Now, what that kind of means is that, if you're buying stocks to try to bounce on a red day because you think the market is oversold, you're gambling. If you're trying to go long or if you're trying to go short on particular stocks just because, the market was down, I don't know, 3-4% on Friday, you're gambling. If you do not have a strategy that you've yourself has back tested hundreds, if not thousands of times, you are gambling. If you are not actually investing real money, and that means not trading a demo account, not trading some paper account that's not even hooked up to live data. If you guys are not actually putting up your hard-earned money or money that you've saved or money that you've inherited or however you got money to trade the markets with, if you guys are not putting up your own money and you're kind of just twiddling your thumbs and watching the charts, you're gambling. Professional traders have an edge. Okay. Now, there is a million different strategies out there that you can use to day trade. There's a million different strategies out there that you can use to swing trade. There's a million different indicators out there that you can use to kind of piece together your own strategy and have an edge. At Evolution Traders, which is my Discord community as well as my website, I have a strategy, and I only use about 3 methods to the strategy, right? So, I'm definitely using the 20 play, which if you guys are in my Discord, you guys understand what that is. I'm definitely using that high of, the market open, that first 30 minutes, get that, digestion and excitement out of the market, taking those high of day, low of day breaks. I'm also, using previous day highs, previous day's lows, kind of getting those channels marked out. And I'm using supply and demand and price action. That's it. I'm not sitting here with the VWAP and the RSI and, the 21 crossing the 9 and the 52 EMA crossing the 172 day SMA. I'm not using none of that other junk. Not saying that the other stuff doesn't work, but it's not what I do. Whatever works for you works for you, right? If you guys are interested in learning my strategy a little bit more, definitely go to my website, evolutiontraders.com, become a lifetime member. I'm going to give you guys access to everything that I'm using. But with that kind of being said, the big reason why a lot of traders fail is because there's too much guessing involved. Let's not worry about what's going to happen on earnings. Let's not worry about the CPI data. Let's not worry about what Jerome Powell is going to say. Let's not worry about the current market condition or the current environment going on with Russia and Ukraine. Let's not worry about what our president is going to come out, whatever's going to come out of his mouth next. Let's not worry about what the guy on Twitter with the Rolex and the Lamborghini is saying. Let's not worry about everybody else and let's start worrying more about ourselves. Now, that's not to say that earnings do not sway what's going on. That's not to say that, what the CPI data numbers and the inflation numbers and all of this other stuff, interest rate hikes, that's not saying that none of that is not going to move the price. But if you have an edge, meaning you have a strategy that you can follow that has been proven, that has been back tested, that is, that you have seen with your own eyes work. If you have a strategy and an edge, you can see these things coming and use your edge to your advantage. So yes, will those catalysts make the stocks go higher? Will those catalysts make the stocks go lower? 100%. But are you worried about them? No, you're not worried about what is going to move the stock. What you are worried about is looking and sitting on your hands and patiently waiting for that edge to come into play. And when your edge and your strategy comes into play, now it's time to play the game. Now it's time to unload the chamber. Now it's time to push our chips to the middle of the table. It's not about that the market bounced right off the open. I need to, be so excited that I want to get long and then get trapped and get crushed. It's not about the market is flushing for the first 3 hours of the day and, feeling like you're missing out because you're not shorting a position short in no man's land and then have yourself get trapped and have your face get ripped off. It's not about that. It's about waiting for your opportunity to present itself, waiting for your strategy and your edge to come into play, having the discipline, being an adult. At the end of the day, psychology is going to make up for 80, if not 90% of how successful you are when it comes to trading. If you're constantly worried about losing money in the stock market, you are going to lose money in the stock market. If you are constantly worried about the stocks are, oversold, I don't want to short way down here because the stock market can't go lower, the stock market will go lower. If you're constantly worried about, thinking that, I have an investment portfolio that's been bleeding for months and months on end. I don't feel like day trading because I don't want to lose any more money. You will continue to lose money. Now, that's not to say that we want to get out here and throw $10,000, $50,000, $100,000 on a trade. Definitely, if you are a newer trader, you want to, especially if you're trading options, you want to have enough screen time and you want to take enough trades to where you are comfortable. I would recommend everyone, if you have been trading for under a year and if you have been trading for under, if you have an account size that's a little bit smaller, I would definitely recommend to sticking with 1 to 3 contracts, at least until you build yourself a cushion. When you build yourself a cushion, you can then start to slowly size up. In the beginning, it is not about making, the $1,000 profit trades. It's not about making the $10,000 profit trades. If you can make $10 over and over and over and over and over again, because you can identify your edge in the market, which is your strategy. If you can do that at will and you can control your emotions enough to understand that when the trade fails, just to get out, because you're always going to get another opportunity to take another trade, you are going to do just fine. The reason why so many day traders fail is because they're guessing. They do not have an edge. They are not journaling their trades. When they take a trade and lose money, they're not writing down the emotions that they were feeling when they lost money. If we can kind of just look at this chart here, it's just a SPY chart here. It's also the 1 hour time frame. What we're looking at here is an area of supply and demand. This is price action trading. Now, disregarding the moving averages that are on my screen, I can tell you that when we get to a price of around 429, 430, we tend to meet a little bit of rejection. That is telling me that there's some supply zone here. I can tell you that when we come down to a price of around 411 to around 414, buyers have been comfortable stepping in here and bouncing it off. Now that we're down here at the bottom again, is this stock going to bounce maybe to the upper middle half of the range, or are we going to break down? It's looking like we're going to bounce. We do have an opportunity to bounce to the middle of the range, still get rejected, and then come crashing down below 411 or the day's lows on Friday, which would tell us then that we need to go short. Let the stock chart tell you when to be short. Let the charts tell you when to be long, and just trust your instincts and trust your knowledge and trust your edge. The main reason why traders fail is because they get away from their edge. They get away from their set of trading rules. That, or they do not have an edge and they do not have rules. They're just buying stocks because they're red, and they're selling stocks because they're green. If you don't understand where these stocks could possibly land or possibly stop, all you're doing is realistically just throwing money around the table. Are you going to win some trades? Of course. Are you going to lose some trades? Of course. But the odds and probability of you being a consistent trader, just kind of guessing what you think is going to happen because you have some inkling or gut feeling, is not really trading, guys. Trading needs to be very, very systematic. It needs to be boring. You need to be watching the same stocks over and over and over and over again. We're not sitting here trying to look at 1,000 tickers or, run to social media and see what everyone else is trading. What's the hot stock of the day? What's the hot stock that's selling off? What's the hot stock that's running? None of that matters, guys. You need to get comfortable with trading the same 2, 3, 4 names. And from those 2 or 3 or 4 names, you can then get comfortable with which one is your favorite, because you're seeing the price action move on a daily basis. I can sit here and tell you that some of my favorite stocks that I love to trade, because I trade these stocks each and every single day, would be stocks like Tesla, stocks like Nvidia, the Triple Qs ETF, stocks like Apple, stocks like AMD. Those are my bread and butters. Those are stocks that I'm watching each and every single day. I know the way that they move like the back of my hand. I know the way that these stocks, what type of ranges that they have. I know what they're going to do when they do break down. And when it doesn't do what the stock is supposed to do, when my edge comes into play, I understand to get out of the trade, because I watch these stocks every single day. Your best traders on Wall Street who work on the trading floor in the pit are not trading 1,000 different tickers. They have 1, 2 stocks. They're trading one market. You're assigned to 2 oil stocks. You're assigned to 2 metals. You're assigned to 2 financials, 1 financial. Maybe you're just trading Apple. Maybe you're just trading Tesla. It doesn't matter. If you're a Tesla trader, it doesn't matter what Qualcomm is doing. If you're a Tesla trader, it doesn't matter what Amazon is doing. That's not your money. That's not your trade. Get comfortable. I would recommend having no more than 10 stocks on your watch list, and I would recommend trading no less than 6 on your watch list, but trading the same names each and every single day. Guys, I hope this video helps. If you want more information, maybe you guys would like to learn all of my strategies that I'm using to day trade, definitely go to my website, evolutiontraders.com, become a lifetime member, get access to all of the watch list, all of the technical analysis, the one-on-ones, the live voice chats, so forth and so forth. Also join the Discord. That link is down in the description box below, and I'll see you guys all in the next one.